Ladies and gentlemen, welcome to this week's episode of Kenya's Market Map. We're very happy to have you here. I don't know why I have been gagged from saying boys and girls.
But now you've said it.
Yeah, but welcome to this week's episode of Kenya's Market Map. For the veteran listeners, welcome back. New listeners, Kenya's Market Map is a weekly podcast where we discuss events in the Kenyan financial space and in the region. Events that happen during the week and provide analysis onto the happenings of the week. So thank you for joining us. Thank you for listening. Thank you for watching if you're watching on YouTube. And I am your host today, Daniel Kalia, and with me I have
Easter Fanning
and
Keegan Kiplimo.
Why has Easter put a bass, deliberate bass in his voice?
People know me to have a very deep voice.
You know, we're in the second decade, episode 21.
Episode number 21.
Yeah, there has to be a change, right?
On the voice.
Forget about it.
Okay, yeah.
Look at this man.
Yeah, so thanks for joining us this week. There's been a number of things going on, so I don't know. I'll start with Keegan. What's your highlight of the week?
My highlight of the week, of course, is Governor Wambora losing his speech. That is, I don't know if you guys saw that.
No.
So midweek, there was a forum about universal healthcare, and Governor Wambora, being the governor of Embu, also doubles up to be the chairman of the Council of Governors.
Yeah.
Now, Governor Wambora, so there were two forums in one day. Mm-hmm. So there was a forum that was held in one particular place and then in another different setting. So he read us his speech in the first setting, then moving on to the second setting, and remember the president was in attendance. He found that he didn't have the second speech and he had the first speech. So it was really funny. People really laughed, but for me, I didn't see anything funny.
Did he repeat the speech? Am I just winged it?
He repeated the speech up to the introduction part and realized, no.
Yeah.
This is not the same speech that I'm supposed to.
That's funny. That's funny.
So, I mean, come on, but it shouldn't be disrupting so much. You know, it came out as if the governor had not gone through the speech to the extent that he can't, address people,
Clearly
in the absence of the speech. But so aside from that...
He stopped the speech afterwards? He didn't continue?
So there was a fuss. He went back, tried to look for where the speech is, and people are waiting for him. People are laughing. The president is wondering what is going on. And then he finally said that I forgot my speech at the minister's health ministry, the minister of health in his car. I'd forgotten the speech there. So, but there was a whole fuss. I was wondering. But anyway, aside from that, coming back to business, my highlight, of course, is the launch of cargo flights from Nairobi to Goma by Jambo Jet. Last year, we saw them launch passenger flights. So this time, it's cargo flights. Great opportunities for guys, doing perishable goods, a bit of cut flowers, the Sapporo lifestyle in...
Valentine's.
In DRC. So there's a poor, the kind of lifestyle in DRC, the people like to dress well, live posh lives, especially in places like Kinshasa. So probably cut flowers would have a good market there. I'm looking at vegetables, and all that. So perishable products as a whole, good opportunity coming in there.
Why do I feel like that's too far-fetched?
To listeners and viewers, I think just someone needs to just sponsor Keegan for a trip to
Goma. This guy loves Goma more than he loves his own.
I think he has like a notification. Any news about Goma, immediately to the phone. Notification right now. Yeah, so any sponsors out there, any corporate sponsors.
Very important.
I wouldn't mind. Equity Bank. Do that thing.
Now you're forgetting your lion.
Wait.
They cannot afford.
Leave that.
They cannot afford.
Leave that story first.
Anyway, Easter.
I should play it down.
How's your week been? What's your highlight?
I've had a good week. Yeah, very productive week. So my highlight for this week has been that with regards to the Africa Continental Free Trade Area.
Yeah.
Kenya is yet to receive somewhere around 113 billion Kenyan shillings. That is as a cushion fund for the losses kind of that it's going to experience, or it has experienced as a result of that Africa Continental Free Trade Area.
It's receiving the money from who?
there's like a pool of funds by the Africa Export-Import Bank.
Afri-Exim Bank.
Afri-Exim Bank.
Yes.
I was forgetting.
Based in Egypt.
Afri-Exim Bank. Yeah, it's based in Egypt. Yeah, so for the funds in this pool is contributed by members. It's contributed by development finance institutions and all that. So from that pool, the funds that will be advanced to the member states of the continental free trade area to cushion them against the diversity or the adversities of getting into this agreement. So for example, once Kenya was one of the countries that adopted that, was very quick to adopt
one of the first people,
Yeah, so that
when we
came
open
with
our markets.
Yes.
Oh, okay.
That came with again, like you said, opening our markets.
Yeah.
Means forgoing some tariffs here and there, forgoing some
Absolutely.
taxes here and there.
Absolutely.
So that's the fund is to cushion that.
Yeah,
the money is to cushion these countries from such reasons, from such effects, and it's to create also financial inclusivity with regards to development.
Yeah.
Because larger countries tend to have more bargaining powers in such consolidated economic blocks.
Yeah.
But so when you see such a fund, it's to ensure equity.
Yeah.
Equity or equitability.
It's equity.
Yes. So
makes a lot of sense. I'm looking at larger economies. If you look at an economy, let's say like Malawi, vis-a-vis an economy like South Africa.
Yeah.
So if both of them open their markets, we know who's gonna gain more than the other.
Exactly.
And I think this is also an incentive for countries to really take up more activity under FCATA. My biggest challenge has been this: data. So AFCTA came into action, was signed in 2018, but operationalization, it started last year, 2021, January.
It was to start. That was the arrangement. It was to start on 1st January 2021, but because of rules of engagement not being clarified and
particularly the rules of origin.
Origin, so not engagement.
Yeah.
There was quite some issues there. So that's what, still, they're only 80 point something percent solved.
Yeah.
They're yet to finalize everything.
But
until that is done, we can't move on.
But then we have to accept that AFCTA is something that will probably clock in well, like what the European Union is doing in the next 20 years. Because one of my biggest challenges has been data. Because where can we find data that in the first 6 months of last year or in the whole of 2020, how much did Kenya trade under AFCTA? You can't find that data. So, I mean, this also goes out to the Secretariat. That
whose desk does that fall?
It obviously falls on the AFCTA Secretariat, working in conjunction with the Ministry of Trade here in Kenya and the other ministries of trade in all the other 43 countries now, 53 countries in Africa.
So I think that falls on the member states. For Kenya, if the Kenya National Bureau of Statistics cannot get that information and feed it to the FCTA larger body, then you can't really blame FCTA.
No. But Easter, we need to understand that, yes, we need to know if this model is even working in the first place. So for a particular trade that is being done, international trade, let's say with Kenya and Zimbabwe or whatever, how can we identify that this trade is being facilitated under FCTA? Can we?
Why can't we?
Because the information has to come from the Secretariat in conjunction with the various governments.
And the various governments have agreed to collaborate.
Absolutely.
Right?
But
so what's the bottleneck there?
The bottleneck information hasn't been given out. As an economic analyst,
okay,
that
so what you're
saying,
is there's too much talk, no much action.
I'm saying two things. One, this thing is going to take a while. Number two, if we are really going to observe, and really take stock of what's happening, we need the data.
Well, why do you think? Why are you so persistent on the fact that it will take a while? Because if this is a crop, you have no fact. You can't influence the rate at which it grows unless only by you can only do so much. For example, fertilizer and all that. But this is something.
This man is now taking us to agriculture.
This is you, Kalia, and myself sitting to make a decision. Once we make that decision, it happens. So these people meet all the time. They can go to Arusha, have this meeting, and come up with a decision.
But do you get where I'm coming from?
No.
The reason why, today, if you wanted to find out, let's say, the trade that is being facilitated under EAC, it's easy because with the EAC Customs Union, you can be able to know that products moving from Kenya to Uganda, they are exempted from certain tariffs and all that. So you can be able to know that for this number of months, this number of years, trade under the EAC protocol that has been facilitated is this and this much. So you can even track progress of whether under the regional economic bloc, if trade is growing, under that facility. So it's just the same thing as the African continental free trade.
So why not extrapolate that? What we are doing with the EAC? Why not extrapolate it to the larger African continental free trade area?
It's not a matter of extrapolating.
What's the matter?
It's about data.
But we get that data once it's operational.
It became operational last year.
Is it? No.
January 1.
No, it's not operational yet. It's not operational. That is when it was supposed to be operational. But they realized there were so many issues.
Because I think for me, from an economic standpoint, if you're doing an analysis, basically it will be an event study. You look at how movement was before the free trade. Before the before that whole thing started working, and then afterwards, if there was an increase in goods of one particular one, and then trying to find the reasons why there was an increase and putting in a factor that this is attributable to the FC.
Yeah, I agree with that. And particularly you can go with the intra-African trade, because that has been one of the data that has been available even before the free trade area came into space, which is at around the intra-African trade. The trade that we are doing amongst ourselves as Africans is sitting at around 16%. And we have been benchmarking with Europe, which is at around 80%.
Yeah. So I think because it's very early, because 2021, it's basically a year, data is still being collected, trying to do an analysis of how the impact has been. Since Esther mentioned that everything has not yet been fully agreed and aligned upon, maybe guys are hesitant to take up using that route for trade agreements and trade.
But don't you think 20 years?
Just a question.
What Keegan is giving the whole thing. Don't you think that is too much?
It's a very conservative number, in the sense that by the time we get into 20 years, it will have happened for sure.
So guys, I want to ask you a question, and this question is a yes or no. There is no gray area here.
I don't like those questions.
And before I ask this question, I just want to tell you guys that when it comes to matters trade, our leaders, presidents, they can shake hands, they can sign deals, but at the end of the day, the people who do trade done is me and you, importers, exporters, people with business owners. Do you think that the African continental free trade area is a pipe dream? Yes or no?
No.
Dan?
No.
Easter?
No.
Thank you.
Think so. Anyway,
proceed.
Yeah.
Answer the same question.
Me?
Yeah.
In the short run, it's a pipe.
No, you said it's a yes or a no.
Yes or no. Look at you, and you're wondering why. If the simple rules of engagement here you cannot adhere to, that is why countries cannot come to simple rules of engagement on the
and that's
African
why it's a pipe dream.
No, I think it's possible, because it's all about, as long as you're working. Because here's the fundamentals. We already have the East African
Commission.
Community, EAC, with their own sort of free trade, free movement of goods and access. Then you have the Southern African bloc having their own
SADC,
COMESA on the
ECOWAS on the Western.
Yeah, I think it's just a matter of time before all these blocks come together and now start coming to an agreement of some sort. But your
highlight, Dan.
Yeah, my highlight. I think there's been a couple of highlights. Yesterday, so for context, depending on when you're listening, normally we record on Saturdays, so we're recording on the 12th of February. So yesterday on 11th, 12 minus 1.
Yes.
We were all on Twitter Spaces. Keegan and I were on space hosted by Mwango Capital. They were kind enough to invite us to run the discussion yesterday. We were having a discussion on infrastructure, on bonds generally. Had a look at the recently issued infrastructure bond.
Yep.
It was a very nice discussion. Had a very nice panel of guys. There was Sunil Sanger.
Yeah, shout out to Sunil.
A veteran in the space. He's been here. He's observed the market for years. Had very good insights. I think the takeaway for me was that if you're investing in the infrastructure bonds, if you're interested in investing in the infrastructure bond, don't just invest in it for the 19-year bond if you're not expecting to hold until maturity, especially
Absolutely.
if you do not have a large ticket size. So if you're investing anything less than 1 million, Sunil mentioned that it's very hard to make an exit before maturity.
The secondary trading is
it's largely inexistent.
It's existent, but it targets like huge ticket size. So I think transactions over 20 million, that's where you'd be able to make an exit. But for smaller transactions, it's very hard. So you're saying if you're playing with the minimal amount, it's safer to invest in the treasury bills, short term, maybe.
T-bonds.
That was the big takeaway from Sunil.
Can't we have an arrangement to aggregate these things?
I think that's possible.
Yes,
It's up
there are
to
actually guys who are doing it. Cashlet, which is by Sycamore, the one that I mentioned, I think in episode 20 or 19.
Yeah.
They're currently in the sandbox.
Yeah.
I think Dove were also trying to move into that space.
But that was for stocks. It's for bonds as well.
It's for bonds, and actually for Cashlet, they're actually looking at both government paper and corporate paper.
paper. Yeah, I think that's a good step to move into this space and having more people coming into the space. So in addition to Sunil, we had Churchill Ogutu, who was kind of like the teacher of the night. He went into everything technical when it comes to defining the technical terms, trying to sort out the pricing, explaining the yield curve. So Mwalimu Shashu yesterday was doing awesome work. Then we also have Kasiva Mutisia, who's a fixed income dealer. For me, I think what I picked from her was she's invested in the Ugandan bond market as well.
I think she's also done some work with the Tanzania bonds.
So she has, even Churchill looks at all bond markets in his day-to-day. So he had quite a bit of insight on the Ugandan market, how their bonds are slightly more they yield better compared to ours, as well as they also gave us insight into the Tanzanian market. Kasiva has invested there, so I think the thing I picked up from her was the minimum investment is for both Tanzania and Uganda is 100,000 Ugandan shillings. In Uganda, so that's like 3K. So basically, for you, if
it's around 3,500.
So if you have 3,500, basically in Uganda, you can invest in a bond. Whereas in Kenya, it's usually 50,000 for the normal bonds, and then 100,000 for infrastructure bonds.
I had, is it Keegan who said that, I had it from Keegan, I think, that the Ugandan bonds market is more active than the Kenyan bonds.
Yes,
I think then it's because of the low threshold.
That was piece of fact that was shared to us by Churchill yesterday. So, and that's the reason, because if with 3K, you can do that.
And there's a higher yield than the Kenyan one.
Yeah, so if you're locally there, it makes sense.
What are the rates?
Like for a 25-year bond compared to the Kenyan one is at like 12, 13. Them, they're at like 15.
Kampala, I'm coming.
You're comparing them to the same biz?
No. Of course, once you've compared to the same base currency, and that's another thing that Kasiva told us. For her, I think she didn't feel like it was worth it investing in the Tanzanian market compared to us, because once you factor in the exchange rate,
so it can be 15%, but then it's 15% Ugandan.
It's 15% Ugandan. So once you incur the transaction cost,
Kampala, I think I'll come later.
Anyway, but I think the key point was that, and this is maybe something guys in the CMA should be listening to, getting more people to be able to invest. I think we tried with Emma Kiba, but there were a lot of operational issues.
Yeah,
really,
with Emma Kiba.
But you see, well,
and even the Treasury now moved it to, because previously it was housed in the Treasury, and they moved it to Central Bank.
Personally, I invested in that, and it was seamless. There were no issues. No delays, no.
That's because you are going for small tickets.
No.
Do you know my ticket size?
That's because I think.
Do you know? No, I want to calm him down. Do you know my ticket?
No, but Emma Kiba was for 3,000 and below. Yeah. So, anyway,
no. You could buy blocks of 3K.
Yeah.
So you could buy as many as 10K.
Anyway,
what did you have to say, Kiga?
You bought a single block.
No, of course not.
Anyway, the thing with Emma Kiba was. It was seamless in terms of buying the block. But I think for guys who are trying to trade afterwards, selling
the secondary market.
Yes.
Okay.
I think that's where the operational challenges came in. Yeah,
right.
and
So
they're
they
trying
might
to fix it because now, in the secondary market now, you have to bring in the whole yield curve mathematics. At what point, when you're selling, the calculation of what is the interest that you need to,
and
that whole,
the clean and dirty.
that whole stuff.
Bonds can be quite complex.
You guys want to fill me up on what clean and that is, because I'm floating.
And
I wasn't on that.
Yeah, that's
so the recording will be
now
coming
you have
out.
To, you have to remain stupid now.
Really?
No.
Okay.
Actually, the recording.
That's how
The
it's
recording
going
is
down.
actually out. The recording is actually out.
Yeah. So Mongo Capital, you can find the recording. We will also get the recording on our platforms, so you can also check them out.
Yep.
It's coming soon.
Yeah, Easter, you also on a space.
Yes.
It was not as engaging and as enlightening as ours, but anyway, carry on. You can tell us about it.
Should we talk numbers? Kalia. Anyway, I was in a Twitter Spaces hosted by the Kenyan Wall Street in collaboration with Centonomy Campus Edition. Not Campus Edition, Centonomy Limited, sorry. I happen to have done the Centonomy Campus Edition course, so that's why the confusion comes in. It was very engaging. You're talking about how to start investing while young. And as Kenya's market map, we have plans of getting that into, that's something in the works. That is to get a segment that you're going to delve deeper.
Absolutely. Watch this space.
On personal finance, because you realize that financial literacy, well, this is a personal, how do you put it? It's a personal interest to make a contribution to the world by improving financial literacy. Yeah. So it was so educative. He would not agree, but I wish.
Why wouldn't I agree?
His sentiments mattered.
Why wouldn't I?
I think the recording will also be coming out for that.
Yes, it's out.
That was a nice setup. It's okay.
The recording is out.
Yeah.
Check it out or find it on the Kenyan Wall Street's Twitter handle page. Yeah, we might put it on our spaces.
Sure. So in that spirit of personal finance, remember that this coming Thursday, that is the 17th of February, we will be joining Ariel Africa together with Riara University, and we'll be having a conversation about your relationship with money. So come join us as we discuss, the various aspects of personal finance, where to invest your money, positive, good financial habits. You can join us virtually through the Riara University YouTube channel, starting from 6 p.m. to 7 p.m. 17th of February is the day. Don't miss.
Hey, that sounded like an announcement.
Man.
That can be an audio, but I don't know why.
You did it last time.
I don't know why
it was so good.
It made me feel like, those church announcements. This Saturday, we are going to have a discussion on relationship with money.
Anyway,
it was
you have another highlight, or we go into
my main highlight, this was just FYI on things that we've been up to. But my main highlight was on telecommunications and the court order that was recently issued in South Africa. In Gauteng. I don't know if that's pronounced. The guy who invented Please Call Me will be getting 5% of the total voice revenue generated by the product in the past 20 years. So that is, it will be getting 5% of all revenue since 2002.
It's actually totaling to 1.3.
When did Safaricom get into
20 years? The past 20 years. Just do 2022 minus 20.
Do you know what?
Simple math. Amukufunzia kwa personal finance.
Ouch. Violence Pro Max. It's actually the money is actually totaling to $1.3 million.
Only?
No, that's kidogo.
Wait, is it 1.3 million or
billion? Yeah.
1.3 million.
Oh, it's billion. It's $1.3 billion because it's coming to around 100 plus billion Kenya shillings. Mm-hmm. And you know that in 2019, Nkosana was offered around 300 million Kenya shillings.
Sorry, who?
Nkosana.
Okay. The same guy.
The gentleman. Yes. It was offered around 360 something million by Vodacom. For that after he went to court. But then he disagreed with that. And now the court has said that Vodafone has to make a higher bid, in connection with the 5% that Dan was mentioning.
Yeah, so it's around 1.4 billion.
Ooh. But this tells me one thing, that, innovation pays. But then at the end of the day, we have to be careful with how we handle innovation, particularly with intellectual property.
But, okay, interestingly, he'll be given 1.4 B, but he's actually demanding for 75 billion.
Dollars.
Shillings. $75 billion, my guy. Is demanding for 75 billion shillings. Around 10 billion.
No. Dan, he's being given 1.3 billion.
Shillings.
Dollars.
Shillings.
It's dollars.
Shillings, my guy. It's 188 million rand.
Okay.
I have a laptop.
I have a brain.
Trust me. Your source is trust me, bro.
No.
My source is
okay. I'll find.
Anyway,
I'll find it.
For him, he's demanding for 10 billion.
I got
rand.
the figures from Standard Media.
10 billion rand.
Yeah.
That is what he's demanding.
Rand.
10 billion rand. Yeah, which is 75 billion shillings. Yeah. But he's likely to get 1.4 billion shillings, which is quite good. But you were talking about intellectual property. Mm-hmm. The question is, this guy at the time
was he an employee or a contractor?
Apparently, I'm yet to confirm this, but what I've heard was he was an intern at the time at Vodacom. So that brings the question of, usually when you're an employee, all intellectual property done while under employment belongs to the company.
The employer.
Yeah.
But then you have to understand that, the labor laws in South Africa are quite different from here in Kenya.
Mm-hmm.
So we could be, we shouldn't make direct assumptions.
We're not making any.
Yeah.
We are not saying that because he did that, then the guy who invented M-Pesa should do the same.
Do you know about the specifications of the deal for the M-Pesa guy?
No.
We don't know.
No.
Yeah.
But do you know for this guy from Nkosana?
I don't know. But the fact that he was an intern is quite interesting when he came up with this. And
yeah. So, because Makate left Vodacom in 2004.
Mm-hmm.
Makate?
Yeah, that's his name. Nkosana Makate.
Okay.
Ali Kosana na Vodafone. Anyway, he left Vodafone. Yeah, he left Vodacom in 2004. Adi Dagia, producer Mazee he smacked himself in the face. Yeah, so I think that's the argument on whether as an employee you should get a portion of your invention or the things that you've contributed in creating. Anyway, yeah, so that was my highlight of the week.
I would like to get more information about that, to understand on what basis did Nkosana think that he's entitled to that.
Yeah, I would like to make an assumption that it probably has to do with the labor laws of South Africa.
Probably, yeah.
Okay.